Have you ever looked at some companies and just thought, wow, they're playing a totally different game? Well, today we're going to pull back the curtain on how these giants build these impenetrable fortresses around their business that make them almost unstoppable. Let's dive in. So let's start with a really big question. How is it that a company like Apple is worth literally trillions of dollars, while its rivals, who, make pretty similar stuff, are worth just a tiny fraction of that? Well, I can tell you it's not by accident. There's a very specific secret ingredient at play here, and once you see it, you'll start seeing it everywhere. And that secret lies in this one powerful idea, the moat. Yeah, you heard that right. Just like that big ditch full of water that protected a medieval castle from attackers, a business moat is this huge structural advantage that shields a company from its competition. The wider the moat, the safer the castle and its treasure. Now, this isn't just some cool business school analogy, okay? For an investor, understanding a company's moat, it's like having a secret weapon. It lets you spot the truly special businesses, the ones that are actually built to last for the long haul. I mean, think about it. Companies with these huge, wide moats, they're just different. They're the ones that can sail right through a recession, they can charge way more for their products and people will happily pay it, and they just consistently pump out profits. They don't just survive, they absolutely dominate. But hey, don't just take my word for it. Let's look at the hard numbers, because the numbers, they tell a story that is pretty much impossible to argue with. We're going to look at a couple of real-world examples so you can see what a wide moat actually looks like in action. All right, first up, the undisputed tech titan Apple. Now, on the surface, you'd say they compete with companies like Dell on computers and Samsung on phones, right? But when we really look under the hood, you start to see they're not even playing the same sport. Okay, let's look at the numbers, because this is where it gets wild. Look at the market cap. Apple isn't just a little bigger. It's worth more than 30 times what Dell is. But honestly, that's not even the craziest part. Look at the margins. For every single dollar that comes in the door, Apple gets to keep 45 cents as gross profit. Dell, they only keep 23 cents. That gap, that is the moat. That's pure pricing power and brand loyalty converted into cold, hard cash. And this chart right here, this is where you really see the power of that moat. After all the bills are paid, a staggering 26% of Apple's revenue is pure take-home profit. For Dell and Samsung, that number barely scrapes into the single digits. This shows Apple isn't just selling more stuff, it's operating in a completely different financial reality. Okay, let's switch gears to another absolutely critical industry, microchips. In this corner, we've got NVIDIA, the undisputed champion of AI chips, and we're going to put it up against the legend, Intel, and the manufacturing beast, TSMC. And again, the numbers are just jaw-dropping. NVIDIA is worth more than 3 times the company that makes most of the world's most advanced chips, TSMC. But look at this, the gross margin, 72%. That is almost unheard of. It means the world is clamoring for their products and they can name their price. And that ROIC number, that just tells you how good they are at turning $1 of investment into even more dollars of profit. It's just off the charts. When you see it laid out like this, you can just feel NVIDIA's dominance. Look, making chips is a great business for TSMC, no doubt. But designing the most powerful, most sought-after chips in the world, that's a whole other level of profitable. That giant 72% bar, well, that's what an insanely wide moat looks like. Okay, so we've seen the what, these incredible financial results. Now let's get into the how. How do they do it? It turns out there are 5 key traits, 5 ingredients that work together to create these ridiculously powerful monopolistic moats. So think of these as the 5 building blocks for that impenetrable fortress. A good company might have 1 or 2, but the truly legendary ones, like Apple and NVIDIA, they've mixed a powerful cocktail of several of these, and they all work together. First up, intangible assets. Now, this is stuff you can't touch, right? It's not a factory or a truck. It's the invisible power of patents, special licenses, and, the big one, brand. Just the Apple brand, that little logo, is estimated to be worth over $500 billion. That's the price you put on the feeling, the trust, and the loyalty that logo inspires in millions of people. Number 2 is economies of scale. This is that classic bigger is better advantage. The more you make of something, the cheaper it gets to make each one. Just think about Amazon. How can they possibly deliver a package to your door the next day for so cheap? Scale. It'll cost a new company billions and billions of dollars just to try and build a competing delivery network. That's a huge wall to climb. Trait number 3 is the network effect, and let me tell you, this might be the most powerful force in the modern economy. Metcalfe's law nails it. A network's value doesn't just grow, it explodes as more people join. Take WhatsApp. If you're the only person using it, it's totally worthless. But because all your friends and family are on it, it's absolutely essential. Fourth on our list, high switching costs. This is all about the pain, whether it's time, money, or just pure hassle of leaving one product for another. If you're deep in the Apple ecosystem, switching to Android means your watch, your tablet, your computer, they all stop talking to each other. It's a huge pain. But it's not just tech. Think about switching your bank account. The nightmare of moving all your automatic payments is a massive switching cost that keeps you right where you are. And last but not least, number 5, cost advantages. This is the secret sauce that lets one company make or do something way cheaper than anyone else. Maybe they have a secret manufacturing process or a perfect location that slashes shipping costs. This advantage lets them either rake in way bigger profits or, if they want to, start a price war that their competitors simply can't afford to fight. Okay, so we know the traits. We know how to spot the giants of today. But the really exciting part, the real challenge, is spotting the giants of tomorrow. So let's look at how a moat can actually grow and evolve over time using one of the most fascinating companies on the planet. Let's talk about Tesla. When they started, you could argue they were just a car company. A cool one, for sure, but still. Their moat was pretty thin. It was really just about that intangible asset, the brand. And they were going up against absolute Goliaths like Toyota and Mercedes. But then everything started to change. Tesla became the leader in electric vehicles, and its moat got way, way wider. They achieved economies of scale in making batteries that nobody else could touch, which is why they were the only ones making a profit on EVs for so long. And they built their charging network, a perfect example of a network effect, which made owning a Tesla super convenient. And this is where the story could get really crazy. If, and it's a big if, but if Tesla crocs full self-driving, its moat could become an ocean. It would stop being a car company and become a software and data company. The data from millions of cars on the road is an intangible asset that might be literally impossible for anyone else to replicate. And that, right there, brings us to the most important point of all. By the time everybody agrees that a company is a monopoly, it's too late. The stock price already reflects it. The real magic, the real opportunity, is finding these companies while they're still building the moat, before it becomes obvious to the entire world. So I'll leave you with this to think about. Using these 5 traits as your new toolkit, what company out there today is quietly digging an unstoppable moat that almost nobody else has noticed yet? Because finding the answer to that question could be the smartest move you ever make.